All right, I think we're on. So today, trading journal, gonna be a red day recap. We're down $200. Times four copy traded XFAs. So we can jump into it here, and there we go. So looking on the daily, last night, like, I wasn't really happy with this bias, and it was kind of right and wrong. But looking at the ES over here, like, we came out of this daily fair value gap, and we didn't really close outside of the previous day range. But I mean, that I was pretty bullish on that, trying to get up here to those all-time highs. In retrospect, it definitely did. And then on the NQ though, what I didn't like was that we did come out of this daily fair value gap, but we finished outside of the previous day's low, or right around it. So I was like, I don't know, like, I'm definitely more bullish here on the ES, and then I'm not so much sure on the NQ. And what ended up happening was pre-market, and we can start getting the 15-minute time frames up here. While they load up. On a side note, while all this stuff loads, because I'll have to get it all readjusted, but just remember, yesterday we talked about these relative equal highs being a high possible draw on liquidity, and it got absolutely blasted here, and it's gonna get taken out, it looks like, on the NASDAQ. Was right, but don't have much to show for it. So anyway, overnight, and I'm mainly going to focus on the ES because that's really where we were at today. Overnight we actually took out all-time highs. I do believe, yeah, just barely. So my bias was previous day high on the ES, and when that happened overnight, I don't know. I mean, I didn't flip like crazy bearish, but I wasn't really sure because my draw's kind of been hit. So maybe, I don't think I should have flipped as bearish as I was, but maybe I shouldn't have. I guess I kind of like thought, oh, okay, well, we swept out all-time highs, and the NQ was trading way lower. This could be like a big SMT, and we're going to finally get the pullback that we've not had on the market. It didn't happen. But anyway, what I did, and I was kind of like narrow-minded on this setup. I'm going to go right to the 1 minute and forget about the NASDAQ for a second. I got to give it a few minutes here to load. Okay. I believe I took this on the 1 minute. Where are we at? Oh, I'm so lost. A 1 minute. It's got way too much going on it here. Yeah. So yeah. There we were. Right here. This was the opened. And so we sweep out these highs again here. Right before open. And then we dump down. Technically here, you could say here, really here, right? We have that market structure shift on the 1 minute with a fair value gap. And I was saying if I could get somewhere on halfway, somewhere in here, I wanted the short. And my stop loss would have had to have gone all the way up here. Unfortunately, I don't know if I got a bad fill or I just kind of like FOMO'd in, but somehow I'm filled down here. Okay. And where that doesn't seem like it's that big of a deal, there was two really big problems with this first trade. I mean, number one, like we just opened up and I just took a 1 minute trade. Now that's like technically a 2022 model. We're sweeping all-time highs. Maybe we're gonna get this pullback. The NQ is still trading, way lower. We're nowhere near all-time highs at the time on the NQ. So I did like this setup. And I think I got in with 2 micros and like it had to have been about $100 a risk. But the problem is that say you're in here and your stop's all the way up here, your risk to reward is so screwed up, even compared to being in here to here. And to tighten it up even more, which is easy to say in retrospect, we could have just said, hey, we're going to use it above here or above here. So if we were in here and our stop's in here, that's a much better risk to reward than here to here. And the reason I hammer that point is because I rode this thing a great ways all the way down. And I was up at most all the way down here, $100 on the trade. And I didn't take anything off. I did move my stop to break even. I think as we put in this swing low, we kind of broke down below here. Yeah. I believe as well. No, I did not add to this trade. I did not add to this trade because we were already so far down that I didn't feel like adding to it was a good idea. But what I was looking for was like super simple. It was equilibrium of the bigger price leg that we were in, and we can look at that on the 15 minute. And then this Asia low. Those are what I was gunning for. And the kind of the big deal with this is, I mean, should I have taken profits? I mean, it's easy to say now, right? But like, I could have had such a better entry. Like, my entry was midpoint of this fair value gap, and I'm in it here, somewhere in here. This is a stupid entry. So what I'm assuming happened is this candle started coming down. I was like, I better jump in, and jumped in. And it was stupid because it did come all the way back up. Didn't reference the 5 minute time frame. That's pretty stupid for me. I mean, I'm wanting to watch the 5 minute for breaking structure or some sort of market structure as well. And I didn't take any profits all the way down. So, I mean, from getting in here and having a stop up here. So I don't think the trade idea was bad at all. The entry could have been better and it should have been better. There should have been more patience. And I think running a 10-point stop or greater 11-point stop on the ES is just way too much. I mean, it's just stupid. So I could have looked to tighten this up a little bit. And I could have made substantially more money. And maybe trailing out would have been a little easier because like would have been locking a little more in. Maybe I would have made money on that trade. I didn't. We didn't get equilibrium and we didn't get Asia low. I was hoping this consolidation point was going to be like a bear flag and that breakdown. And we didn't get it. We came back down, tested previous day high, and that was that. I got stopped out as we came back up here. So what the next trade I took, and let's look at the 15 minute. Okay. because this is really important as well. What a day. This was valid in the 5-minute and the 15-minute. The levels worked out really nicely on both of them. Again, coming into the day, okay, before the market opened up. These red lines, I had 3 red lines marked out. We had relative equal lows. We had relative equal lows all sitting 3 years. Like, this entire area to me was super suspect that we could get stops ran. And then we did have this low down here, which I believe in the 5-minute had relative equal lows. And of course we had Asia lows. This was also equilibrium of this entire price leg. That's what I was looking for. What it really ended up being was kind of like from that midnight price, the low to the high, retraced into our OTE, which we can look at right here. Again, it just, I mean, this is easy to say in retrospect, but it did right into our optimal for 2 zones here, right into it, and it went off. The bigger thing to have noted here on this 15-minute is okay, number one, the entire liquidity pool down here that I was looking to get hit, it got hit. So instead of shooting for the moon, like the other day I was up $400 and I hit break even. Today I was up $100 and I hit break even. Well, instead of shooting for like these crazy trades, what if we did tighten up that stop a little bit, right? Like when we got in up here in the 1 minute, what if our stop wasn't all the way up there, right at the high? And that's no, there's nothing wrong with placing it there if it was above the fair value gap or the second candle that made the fair value gap, or if it wasn't this high. But we got the entry we were supposed to get. Our risk to reward would have been on point, right? And this could have been a 2 or 3 hour trade. Targeting what? Our entire area of liquidity right here. It doesn't have to go all the way to the freaking lows, man. We were bullish coming in the day. And it's like you get this little sweep, and all of a sudden, you know, we're going all the way down to Asia lows. You know, you were bullish on the day, and if you'd have kept that bias, you know, there was nothing wrong with this short, but you're shorting a bull market. So stop targeting these big levels. The other day you gave up $400. Today you gave up $100. And if you would have been positioned right in this short, even though the big daily move was bullish, this could have been an amazing trade. So the entry was wrong. The stop loss could have been right depending on our entry, but our stop was way too big compared to where we got in at. And that hurt our risk to reward, and that hurt us getting out of this trade. Our levels hit, and we stayed in the trade. So interesting. What else is interesting on this 15-minute time frame is this. Okay. This level and this corresponding level on the ES. Okay. If you look, the ES sells off and it stays all the way up here. It stays all the way up in this area. Okay. The NQ sells all the way down. The NQ actually took out my Asia target. So we would have hit equilibrium. And we would have hit my Asia target. I was just in the wrong one. The ES I knew was more bullish on the day. I'd already established that last night. And I took the short on the ES that was more bullish than the NASDAQ, and the NASDAQ actually would have gave that move back. I should have stayed in the more bearish indice to go short. And the trade would have played out perfectly. So, what do? You know, lesson learned. Also, another note on this, right? So, the NQ takes all this out. So, the NQ's putting these lows in the ES is staying all the way up here. It's like it's kind of like that SMT, right? Like we're taking lows out down here, and the ES was staying all the way up. Like that's a sign. It's a signal. That, hey, hang on a minute. Like something ain't right here, and we may be a little bit more bullish over here than like this could be a manipulation, and it definitely was. You know that. You know, like you got so sidetracked on that stupid 1 minute time frame that you lost track of this bigger picture. And probably if you would have stayed inside of this bigger picture, it would have been better. So we had that. Target was hit here, and that would have been another thing to look. Hey, we're taking Asia lows out on the NASDAQ. We're nowhere near it over here. Like, where was that thought process when you were in this trade? You were just fixated on this ES chart. What's the NQ doing? Oh, we're taking Asia highs out or Asia lows out. Equilibrium hit. We're not doing it over here. Hey, SMT, we might need to be cutting this trade, right? Like, is there a reason to get out? And maybe because our risk to reward was so skewed on the ES, it wouldn't have been a big win, but whatever, right? But that broke us even, so we weren't down anything. So how did we get down money? Okay, this is why I got down money. This all-time high, London high, this whole area swept out. Displacement on the 15-minute, market structure break to the downside. Now, I'm thinking I was bullish on the day, and I changed my bias. I thought the NQ's trading lower. I didn't see kind of this, maybe some of this SMT stuff playing out at the time it was happening. And this is a trading model. Liquidity sweep, break-in structure, fair value gap. Like, there was nothing wrong with this setup. And so what happened was I was watching this on the bigger time frame, and we got stopped out at break even. And so when I seen, after we got stopped out and I seen this candle, we traded back up into this fair value gap and rejected back down. I thought, okay, this is where we're going to get that rotation back down to at least equilibrium, if not Asia lows. Let me let this load again. This dirty thing. That's why I can't move my charts too quick. It puts me back 30 days. I don't know why. Yeah, there it goes. I don't know why it does this. I'll have to try to auto zoom. We're still gonna have to go all the way back. You can fast forward through this part of the video so I get all the way back there. Okay. Let's see, we're at 7:23, 9:47 a.m. So yeah, we get into the short, it comes back up. Had to have been what, somewhere around here. I do believe so. I think we got stopped out here. I think we got stopped out here. Because my stop initially I had it at 67. And I pulled it back down to break even. Yeah, we got taken out. I'd have to go back and forth. It was somewhere in this area that I got short. I think it was here because we swept this area out. No, it wasn't. It was here that I got short. Right? I would have to look back. I wish I had my let's see, let's look. Let me pull this up here. You can take a look. We gotta go here. Oh, that was for today. I was gonna say I didn't look right. Average winning trade was $1. Nice. I didn't know I even had a winning trade today. $2.50. Nice. Here we were. Entry time was 10:40. Okay. That'd be 11:40 over here, I think. Yeah, it was. So here's what I looked at. This is where like you just start like your FOMO set in, okay? What I did, so our stop was here. It was initially up here. I moved it to break even and we got stopped. And so when that happened over here, we got stopped out. I thought, boy, look at this. All the way back down. All the way back down. This thing is going to go all the way down and it's going to hit my targets. And so I was looking at it, we were inside of that big 15-minute fair value gap still. And we kind of finished pretty bad, looking like we're going to come out of it. So I said, okay, I'm going to take another stab at this. But my stop loss and my entry, it wasn't the greatest risk to reward. So I'm going to tighten this up a little bit. And when you tighten it up on the ES, you can obviously take more contracts because, you know, your risk. And I felt at the time that this was going to go down. I think it was emotion. Like, I think instead of, because I didn't see this 15-minute SMT, I didn't see, I just didn't see the bigger picture, right? Which is easy to say now. But this was just kind of dumb. We sweep, right? Again, narrow mind on the 1 minute. We take this out. We take me out, right? And then we get this little bit of this displacement candle. So I'm like, okay, this comes back up in here. This is London low again, right? Maybe we'll reject it. What I'm going to do is put my stop here at 467, okay? And I'm going to get in here. And that was afforded me 7 contracts, micro contracts. And the problem with that was it was $150. And maybe we did lose $50 on this trade. I'll have to look on that. Where are we at here? We lost $30 on that trade. Okay. Okay, so we lost $30. So I did let it go against me a little bit. So we must have added to it. I must have added to that trade. I guess I didn't think I did. So that initial trade, we took 2 micros, and as it came down, we added to it and shore up that stop up tighter. Instead of letting it hit break even, somehow we did let it go against us $30. So that's kind of stupid. It's a weird $30. It's like, okay. So odd. This is a problem when you can't remember and like, you know, what happened. It's a problem you need to fix. This next one we lost $150 on. But this is what happened. I seen, okay, we have this displacement, so I'm gonna get in here. I get in here short. Again, equilibrium, Asia lows. This is gonna be great. Not even like look at do. I'm kind of thinking we're bear flagging, so we're just gonna like break this down, and we're in this fair value gap. We've displaced down. I mean, the 15-minute model was totally there, like, but the entry was just kind of like dumb because, yeah, we were in this 15-minute fair value gap, but like, what did the 5-minute look like? Did we break structure on a 5-minute? Should we be bearish? What's the bigger time frames? Like, instead of like taking that step back, it's like, oh, I lost, and let me find the next trade. And you always find it. And so I got short when that tariff news came out, and yeah, it was not great. So I lost $150 on that trade, which I feel like it was a little more than I thought it was going to be. But whether we got slipped, maybe. I don't think we would have, though, because that candle wasn't so big. I don't know. We were down $180 on the day at that point. 180 something. 180, 187. And I don't even need to open this up. and go through the NASDAQ trade, because essentially what it was is this news pumped, and as this was coming back down, I'm like, okay, is it just coming back down for a retrace, or are we just gonna get this whole move back up, or like what's going on? And I scalped 10 micros long, and as soon as it gets up on me just a little bit, I hit break even, trying to hope that it just goes up and I can catch a sweet runners, and if it stops me out, it's at break even, it's no big deal. Thank God I got in it, and it did go up just a little bit. I mean, I was paying like $40 on 10 micros, and I hit break even, and of course it stopped me out. And at that point, like I was like, okay, you just took a stupid trade that was outside of your risk parameters. You're down $190 now on the day. Your max loss is $200. So like, you got to make a decision right now. And clearly you're not seeing the market very well right now. The moves are happening already. And do you, like you can already take a payout out of Topstep right now. Are you gonna blow it all up just to start scalping minis and act like an idiot? Or are you gonna actually stop today and follow your rules? And I am so glad that you decided to stop, because at the time you just want to get it back, and you don't care what the trade is. I mean, it doesn't even have to be a trade. It's like, just put something on. And that's always the wrong move. I mean, even if you reward yourself, like you get it, you do it and you make money, it's still the wrong move. Like it's like robbing a bank. Like that's not how we want to make our money. Like it's frowned upon. You don't do that. And then you just reinforce bad habits that way, even if you get it right. So I am glad that I stopped. I took 2 shorts, and the first one could have had a better entry. It didn't hit either of my take profits, but the earlier liquidity levels that I put out there, they got hit, and I didn't take anything off because I was up, like, I wasn't even up a 1-to-1. Or maybe I just barely got up 1. So, that first trade, entry could have been better. Maybe you could have adjusted the stop loss, but the entry could have been better. You should not be shooting for the stars. Hey, my liquidity got taken, and I was bullish on the day, and so maybe if I'm taking a short, it needs not be a long hold time short, even if it plays out. I could have helped lock some money in as well. I want to point out that it doesn't, I guess I don't have to get this whole thing up because it's the 1 minute. But if you look, Asia expanded last night. When Asia expands, you don't expect that low or that high, depending on which way it went, but it went up last night. So you don't expect that Asia low to get taken out. Maybe 50% if you're lucky. And it did that. Like, it came back 50% of that Asia range. Equilibrium, that should have been your take profit. You know, you were shooting for too big of targets today because you had too big of a stop loss to even start with, to even give yourself a shot. And you are not wanting to take smaller stops because you don't want to just get stopped out quick. But if your analysis is right, you know, I think it's going to help you in the long run, like taking this money and just not getting too crazy all the time. Like, you know, it was a good short. I mean, you got into it and it worked out. And then the second one, it was just impulsive. I mean, you should have taken a step back. Let me look at the hourly and the 15-minute, and I kind of did, but like that was still just fried in my brain that we're going to Asia lows. And in all fairness, it kind of does on that chart. Just looking at it right on the ES, like a big bear flag. But I don't trade bear flags, so if I would have stuck to that bias, it would have been right. And so the position sizing on that one was too much. Like, I don't really want to enter in like more than $100 on a trade on a risk, because if I have a $200 stop loss, I can afford 2 losses. So I think the risk was a little bit too much on that, and I could be down 150 versus about 200 today. So I could have done that a little bit better. And this the trade in itself, like, really weak, like a really weak setup. You couldn't even use the top of the 15-minute fair value gap because it would have been too much risk. So it's just too weak. I mean, you didn't even legitimately here. You come down and yeah, you can say, oh, it's a market stroke, but I mean, you would have needed this low realistically to have gotten taken out before you had legitimate market structure shift on the 1 minute, and it didn't happen. It's like, look at this: lower high, lower high, lower high, lower, or higher, whatever. Market structure is bullish. I mean, it was lower highs, higher lows. God, my brain is cooked today. We're making higher highs. How about that? Higher highs and higher lows. That'd be right. Market structure is bullish. Okay. And it doesn't mean anything on a bigger fair value gap. And anyway, I guess all this just to say, first trade of the day, entry could have been better. Second trade of the day, setup wouldn't really agree. Like, you painted that setup on there because that's what you wanted to see. And then the NASDAQ scalp, thank God it just broke you even and didn't do anything stupid. And it's good that you stopped because the market just exploded higher and you didn't see it. Now, if you would have waited, you potentially could have gotten a little bit of a 15-minute setup to highs today. Maybe not it wasn't perfect, but it would have aligned with your daily bias and it would have aligned with market structure. So being more patient is, I see a lot of guys are have to jump, they're making money and stuff. That isn't your thing. Just wait and just let something set up, because you were right again today. I mean, you kept going on yesterday about how the market's just taking lows out and going up higher, and market structure is bullish, so why would I be bearish? And then in 2 seconds you flipped your bias. And so have a little bit more conviction in your setups and just wait. Let there be not waste your money, but put your risk on good trades, not because you want to see something. Because, yeah, you were wrong, and it's a good thing you stopped today. So, good job. You stuck to the rules. You stopped. Thank God. Everything's good. Accounts are, everything is, you had a red day. It's not a big deal. But we need to have more patience and really keep that eye focus in these higher time frames. And that's where we'll find the best setups at. It's better to not trade than it is to just do idiotic things. So yeah, going into tomorrow, I mean, I haven't done my chart work here, but we're pushing all-time highs. That NASDAQ still hasn't taken that out yet, but we'll see what tomorrow brings. It wasn't a bad day today, just a little red day, no big deal. But really, really work on patience. And is the setup legitimate, or is it just something that I want to see? Right? Are we targeting things that are realistic? Am I watching all my liquidity levels get taken? My take profits hit while I'm just sitting in it because I'm shooting for a home run? Taking that $100 today could have been a $400 or $300 P&L swing, because now you're down 200. You could have been up 100, right? So, thought process was okay. We stuck to our rules. It's no big deal. We love to trade another day. So it's been a great week so far. No big deal today, and we'll just come back and see what we got tomorrow. So that is going to be the journal entry for today. I guess we will catch everybody back here tomorrow.